Demand zone. Yeah, there's things about demand zone. I'm going to teach you about them. This are going to be our entry, guys. I'm going to teach you a strategy that no one has. Very true. Like your mentor has never taught you this. Maybe he has taught you, but you have never understood. But I'm going to make you to understand because, yeah. Anyway, let's continue. When we view below the market price, old highs below the market price, old lows, you will see a lot of pending orders. Below the market price or old low, you will see a lot of pending sell orders or interested sellers, and it is usually smart money who want to buy below market price or old highs. Like I told you guys, smart money wants where there is buyers for them to, where there is sellers for them to buy those sell orders. Because if they are selling, they'll buy to go up until that's what's happening. That's what's happening. So what they will accumulate, like I told you, let's say smart money has accumulated orders, buy orders of about let's say $5 trillion, and it or got buy orders of $5 trillion, and sell orders of $2 trillion. So from that calculation, 5 minus 2 trillion is 3 trillion. So looking at this buying power, we have to just, have to let the market go up. We have to let the market buy. So we have to find people who are willing to sell so that we have to look for $5 trillion worth of people. We have to find sell orders for this 5 trillion people who want to buy those sell orders. There will be people 2 trillion who are selling, 5 trillion who are buying at that time. Now the market will look for what? For people, for $5 trillion worth of people who are selling, which is not available at the moment. At the moment, they will just sell the 2 trillion and they'll be left with 3. And the other days, they'll look for what? For the other 3 trillion. After they are finished with the other 3 trillion, they'll go the other way. For what? For the buy side. You understand? And those other people will be fucked, and those other people will gain. So, how does it do that? It does that through these things, raiding of those lows to gain liquidity. Raid somewhere, again here to gain liquidity. Go to the other side to raid more, and go the other way after gaining 5 trillion. That's how it works. And what I heard is that these central banks or the clearing houses does these transactions in a T+2 system. A T+2 system is a 2-day system, a 48-hour system, or so that the whole of the transactions can be made. And mind you, in just the forex market, I'm not talking about the index market, the stock market. No, I'm talking about the currency, the forex market, the currency market, not synthetic indices. Not those things, not bonus take. No, the forex market. In the forex market alone, about $7 trillion is being transacted in a fucking day. Ukuthi itsele $1 wapalelwa mayinika amfethu. You need a mentor like me. I'm going to teach you a simple strategy, a mechanical strategy. Like in future, you're going to be a fucking machine. You're going to be a robot. You're going to be an EA. You don't need an EA. You be your own EA, an eater. Let's go. Hey, where was I? Okay, I'm done. Okay. When we view the chart, we're looking at when price is trading presently. When we view the chart, we are looking at where price is trading presently. If an asset or instrument has become bearish, or it is already bearish, or it was already bearish and presently going. Let me start. If an asset or instrument has become bearish, or it was already bearish and presently going short in the marketplace, what smart money and smart money minded traders like us will do is to sell above old highs. Like I told you, let me not waste your time. Why? Above old highs, there is liquidity in the form of buy stops for buy orders, for buy sellers and whatever. Like I explained all of these things. I don't need to read further. I don't waste your time. Old highs liquidity is engineered or raided for smart money to activate their sell or sell short orders, whatever. You can see the examples. That's the ray, whatever. That's the hitting of some significant old high, old low. This is an old low which was hit and continue being hit to accumulate more orders to go to the upper side. Hit to go to the upper side so that we can accumulate whatever. I'm going to teach you all these things up at the forward stages, whatever, at the forward videos. This is an example. What do you see? Pause the video and label what you see. Where's the buy side liquidity? Where's the sell side liquidity? Wait a minute, let's talk about that. Oh guys, there's what we call buy side liquidity and sell side liquidity. Buy side liquidity is where we have buy orders for people at, that's where we have buy side liquidity we have at old highs, sell side liquidity we have at old lows. It can be in buy or sell orders, or maybe trailing stops that are held. Yeah, I'll explain about those things. Yeah, what do you see? What do you see? Is this a sell side liquidity? Yes, I don't know. Is this a buy side liquidity? Yes, I don't know. Figure that out. Whatever. Let's continue. Pause. After liquidity raids or engineered of liquidity, after liquidity raids or engineering of liquidity, okay. After liquidity raids or engineering of liquidity, where the market was at its fair value at that time, like I told you, fair value is where there's an agreement of a buyer or a seller. Yeah, let's sell at this price, and then they do their transaction. They're done, and then they f off. So, the algorithm will start to reprice higher after what that fair value has been done, in search for or target to where the next fair value of the asset or instrument is. I told you about that. What is fair value? Fair value is the estimated price at which an asset is bought or sold when both the buyer or seller freely agree on a price. Fair value refers to the actual value of an asset that is agreed upon by the seller or buyer. That's the Google definitions. Like, yeah, Dr. ICT got the word fair value from that because liquidity already told you that that's where the buying selling is happening. That's where liquidity is. So in between, he didn't need to say liquidity, so he had to say fair value. But obviously, it's still a draw on liquidity. Anyway, let's continue. Old highs, old low, internal because they're why are they internal? Because they're between historical old lows and old highs. This was a mistake. I was just copy and pasting because I'm a lady. I'm a not a lady, laziest mother. Whatever. Yeah, this is a break of structure. This is a break of structure that I taught in the previous video on market structure shift. This is a break of structure of a type of market structure shift because of what is breaking structure to change direction to the upper side. It's going up. While it's going up, it's raiding. If you raids, it's going up, accumulating more orders to go up, doing the same thing as it's going down, whatever, and that's at a cost. But the thing is, central banks, they know what they're doing. They don't do their transactions or trading with stop losses because they control the market. If you control the market, why do you need a stop loss? If you put a stop loss, you'll be crazy or high, and I need to know what what weed you smoke. Recommend that, nigga. Let's continue. With this knowledge, you will always want one, buy at discount levels, two, and sell at premium levels. My nigga, if you go to the store, what do you want? A discount on everything you buy. Like, that's obvious. I want a discount on everything, even on a label on Bukhari, Lobola. I want a discount on the bright price. Like, because I don't know what's gonna happen in the future with your wife. Because now everything, I know most of marriages go on divorce, and according to the way my relationships end in about 4 weeks, that's the length. The reason why I say 4 weeks because I want to just to make it sound long. Because saying a month is it's disappointing. But 4 weeks, that's the length of my relationships. 2 weeks is the most. Is the most frequent. Yeah, is the whatever value, average value. Yeah, I don't think I'm going to marry. I don't think I'm going to get in a relationship. But I'm in a relationship with my model because I'm a trader and it's doing the things that it's doing. Yeah, you're going to want to buy at discount levels, and you're going to buy, and you're going to want to buy at you're going to want to sell at premium levels. I can't understand what those rigs are silicon again. I want to like Xbox rig 5,000 or the rigs 7,000. How I don't know. I'm just giving an example. Yeah, and I'm going to teach you about premium and discount levels in the future, which is going to deal more into our entry model. Which guys, like now I know how to explain things. I'm going to explain you simply how to fucking be good in the market, because I'm going to force you like, hey nigga, beer, nigga, knowledge, gay nigga. Thank you guys for watching. Remember, money management, risk management, and a good psychology, a good strategy or analyzing concept, whatever, Falcon, supply and demand, whatever. Like gang, uh, trend lines, resistance, supply, whatever. Like nigga, I've done like Batman patterns, like those butterfly patterns. I did those things in Fate with my friends. Nigga, they worked. With risk management and trade management, they worked, but I was fucked most of the times because of psychology. Fate. Yeah, whatever. Those things are 16 is the only way you're going to be profitable, really consistent, or consistently profitable and win in this industry. Treat this as a business. Likewise, this is the mission of all trades. Goodbye. I love you and your girlfriends. Thank you.